What's happening in the New Zealand property market right now? In this video, you're going to learn what's happening to property prices and where they'll soon go, the good and the bad things about buying a property today, and then we're going to play a little game of hot or not and look at where the opportunities are right around the country. House prices across New Zealand are falling in most places. As a whole, the country's house prices are down 12.5% from their peak in November 21 through to September 2022. So meet Glenn. He's a property investor based in Hamilton, and let's say he owns a house that is worth $1 million at the peak of the market back in November. And let's say that the value of this property has followed the New Zealand property market exactly. Well, his house that was worth $1 million at the peak is now worth $875K. He's made a loss of $125K compared to a year ago, at least on paper. But what you've also got to remember is that prior to that peak, property prices right around the country spiked for about 18 months. Back in April 2020, during the first COVID lockdown, Glenn's house would have only been worth about $700K. So has Glenn lost $125 because his house used to be worth $1 million and now it's worth $875K? Or has he made $175K because it's gone up from $700K up to $875 today? Well, both. It depends what you use as the starting point. And that's why you see different people viewing the housing market differently. So if that's what's happened to house prices in the past, where are they going to go next? While house prices are still falling, they're falling at a slower and slower pace. Back in March, house prices fell by 2% in a single month. Then bam, 2% again in April. Bam, another 1.6% in May. Bam, 2% again in June, then 1.4% in July, 1.3% in August, and just 0.7% in September. This is starting to suggest that we are coming to the end of falling house prices. We're not there yet, but it's coming soon. Based on our modelling here at Opus Partners, we currently predict that the market will bottom out in March 23. And between now and then, the market will fall another 1.6 to 3% from today's prices. At that point, the market is likely to start recovering. That means the total downturn will have lasted 16 months. That's roughly the same as the last house price downturn, which happened back in 2008 during the GFC. That time, the property market downturn lasted 18 months. You might be wondering, is now the right time to buy then? Well, there are always things working for and against you in the property market. So let's go through the good and the bad about buying today. Pro number one is that house prices are down. You can buy a property cheaper today than you could 12 months ago. For example, we're currently working with a pair of property investors, Bobby and Mark. They live in Auckland, but they're buying their first investment property down in Christchurch. And they are buying this 2-bed townhouse on Markroff Street. They're going to pay $559K for this property, and it would have sold for $650K easily at the peak of the market 12 months ago. You see, back then you couldn't buy a 2-bed townhouse in Christchurch for less than $650K. So Bobby and Mark are paying about $91,000 less than they would have just a year ago. Pro number two is the number of properties available for sale. They're up. At the end of October, there were 28,000 properties listed on realestate.co.nz. That's up 72% on the prior year. And what that means is choice for both investors and home buyers. So you've got a better shot at finding the property you actually want. And pro number three is that prices will rebound. House prices move in cycles. Right now they're down, but at some point they will recover as incomes go up and inflation naturally occurs. While their modelling is slightly different to ours, the Reserve Bank currently forecasts that house prices will increase 11% over the 2 years following the bottoming out of the market. So if you do invest over the next 6 to 12 months, there is the potential for some short-term capital gains. But of course, there are always factors working against you as well. Drawback number one is interest rates. They're high. They've gone from the low 2s all the way up to around 6%. Drawback number two is New Zealand's immigration. Right now, there are more people leaving the country than arriving here. Now, that doesn't mean the population is necessarily declining because people are still having babies. But this is one of the scary headlines that's making people a bit nervous about what's going to happen to house prices over the next couple of years. And drawback number three is the higher taxes for property investors. Next April, property investors are going to be hit again with higher taxes as the interest deductibility rules are further phased in. This means that investors who own existing properties are going to pay significantly more tax. So all up, if you're thinking, should I buy now? Well, there are pros and cons, but what you can't do is wait until all of those cons disappear. Because once interest rates come down and once net migration turns the other way, and if the interest deductibility rules are repealed, what's going to happen? Those positives of lower house prices, more stock in the market, they're going to be gone because more people are going to enter the market as those cons disappear. And that idea of trade-offs in the property market is one of the key messages in our property investment book, Wealth Plan, which has just been released. You can pick up your copy at wealthplanbook.com. So if you are going to buy property, where are the opportunities? Let's play a little game of hot or not to see where the opportunities are in New Zealand. If a city is hot, that means it's a good time to invest. If it's not a good place to invest right now. Let's start with Wanganui. Hot or not? Definitely not. House prices there are down 14.5% since their peak in January, and even after that, they're still overvalued by 18%. This city is still vulnerable to further house price falls. Auckland, hot or not? It's hot. House prices there have fallen 10.4% since their February peak, and house prices are now in line with the rest of the country, neither over nor undervalued. But once net migration returns, Auckland will be one of the first areas where prices start to take off again. Canterbury, hot or not? Also hot. Canterbury is still one of the most undervalued areas in the country, about 15 to 17%. And that's the reason why the region has been less impacted by falling house prices. Christchurch and the surrounding districts all down less than 5% compared to their peaks, and Ashburton down less than 0.1%. And just before we get to the last area, if you're enjoying learning about property in a data-focused way, make sure you hit the subscribe button. We release new videos every Monday and Wednesday. What about the West Coast? Hot or not? This is an interesting one because places like the Grey District are still increasing in value. And there was this article recently published in Stuff that talked about the West Coast having the highest property investment yields. Well, even though that's true, in that same article, I talked to the journalist about the two things that the West Coast has going against it. Firstly, it is the only region in the country that has a declining population. And because the population is declining and properties are cheap, the properties there do tend to be old and not well maintained. That means that property buyers often have to spend a lot of money attending to old and costly maintenance problems. So the opportunities that we see in New Zealand are primarily in Canterbury and Auckland, and then in some parts of Wellington and Hamilton.